Hello future millionaire and welcome to our video. Bitcoin, the largest cryptocurrency by market capitalization, is a risky investment with high volatility. It should only be considered if you have a high tolerance for risk, are in a strong financial position, and could lose any money you invest in it. If you choose to invest, it's important to maintain a diversified portfolio that includes many different types of investments to reduce your overall risk exposure. As a general rule, don't invest more than 10% of your portfolio in risky assets like Bitcoin. Leave your like, subscribe to the channel, and turn on notifications so you don't miss any more amazing tips like this one. Ready to invest in crypto? Start planning here. Pros: Bitcoin has historically offered the potential for high returns. It is decentralized. That said, many people choose to trade and store Bitcoin on centralized platforms. Cons: Bitcoin price may fall. Quite. In 2022, it fell more than 75% below its all-time high. Unlike traditional financial exchanges, crypto exchanges do not have circuit breakers, which automatically pause trading when prices drop too quickly. Crypto markets also trade 24/7, and dramatic drops can happen at any time. Transactions are irreversible. People have lost millions of dollars worth of Bitcoin because they lost or forgot their wallet credentials. Multiple crypto platforms where you can buy or sell Bitcoin and other currencies have collapsed, leaving users in the lurch. More recently, exchanges FTX and FTX US have filed for Chapter 11 bankruptcy. Cryptocurrency exchanges lack basic consumer protections such as insurance protection from the Securities Investor Protection Corporation and Federal Deposit Insurance Corporation, found in traditional financial products. What kind of investment is Bitcoin? After more than a decade of existence, there is still debate about what kind of investment Bitcoin is. Owning Bitcoin is not like owning stock in a company. Unlike a business, Bitcoin does not generate revenue by selling products or services. It does not issue dividends. Nor does it have a CEO, board of directors, or any other centralized group that sets goals or can be held accountable. In June 2022, Securities and Exchange Commission Chairman Gary Gensler said on CNBC that some cryptocurrencies have the key attributes of a security, while others, specifically Bitcoin, are a commodity. Commodities are associated with raw materials such as metal, grains, and milk. Commodity markets are regulated by the Commodity Futures Trading Commission, which also regulates foreign exchange trading and is the most active government agency in regulating cryptocurrencies. Still others say it's a currency, something you can use to pay for goods and services. While there are companies that accept Bitcoin, it is far from widespread practice. There is also the possibility of being a new asset class. Bitcoin and volatility. Bitcoin's exponential growth and ability to retain its title as the most valuable cryptocurrency may mask the fact that its rise has not been linear. See the chart below to explore this. The advantage of buying Bitcoin for a penny in 2010 is clear. But with volatility also come major downsides. Someone who bought Bitcoin in 2013 would have seen their investment drop by 80% and it wouldn't be above water for another 3 years. A decline in 2018 lasted about a year, and there have been declines of 50% or more in 2021 and again in 2022. Anyone investing in Bitcoin hopes for the best, but must also be prepared for major downturns. Although Bitcoin has recovered several times, there is also the possibility of reaching zero. For example, if several crypto platforms fail and there is a massive sell-off. Thank you for watching this video until the end. Share this video with people who need this type of content. Don't forget to leave your like, subscribe to our channel, and turn on notifications so you don't miss any of our tips on how to get rich in 2023.